Today I would like to do a couple of trade analysis on my practice trades recently and find out the best strategies that we can use. Let's start with this first trade I took recently. What I was doing here was actually pretty simple. I was following the uptrend by using imbalances. First of all, the price dipped down and a major imbalance failed at the bottom. Then I started following the imbalances in the direction of the new trend. So I was basically long biased here, mainly taking long trades, especially using the imbalances. I can't really say I was using the stock RSI much at all because it was too much confusing and giving fake signals at the moment. And this ended up being an easy winner with nothing complicated about it. It was really just about following the direction of the trend. When I feel confident about a trade, everything feels much easier deep down inside. And that's what I call a trader instinct. Sometimes when I enter a trade, I don't feel comfortable at all. But this trade, for example, felt very smooth and easy from the start. Later on, I was following the trend again, but I was a little confused here at first. Those mini imbalances above failed and the price dropped down to this bigger imbalance below. So what I was doing here was using the larger imbalance and liquidity sweep for a quick reaction trade, a kind of small reversal. I didn't really know what was going to happen at this point because the trend could have been changing here. Since the inner imbalance failed, I was following a simple idea of getting a quick reaction from the liquidity. I am glad that this trade worked out, and I'm happy that my idea worked as well. There was also a main reason why I didn't use the stock RSI again here. It was giving too many fake signals, one after another, and it just wasn't reliable in that moment. At the end of the day, there is no 100% proven strategy or indicator in trading. Any strategy or indicator can give you a lot of false ideas and fake signals. However, you need to find a routine that works for you and stick with it consistently, even if you lose or win in a long run. At first in this trade, the price looked like it was crashing to me, but then it completely blew through this small internal imbalance with one huge powerful candlestick. This was a very reactive trade actually based on the stock RSI crossover. So honestly, this was still a risky trade, and I definitely could have lost money here. That's because I didn't have enough confirmation and I didn't fully analyze what was really happening in the market. It was more of a on-the-go decision based on mostly on the indicator stock RSI and green pump candlestick. However, later on, seeing the momentum imbalance appear, moving in my direction gave me a little bit more confidence. It made me realize that buyers were clearly pushing the price higher, and I was probably on the right side of the trade. And I am glad this trade also ended up working out for me. Using momentum imbalances is one of the easiest ways to identify the trend direction. And when imbalances started to fail, they can often give you a sense that a reversal may be coming. These are very simple and useful price action tricks. Now later on, I was following the structure and watching what was happening with the price. With the newly created momentum imbalance, I started feeling more bullish about the price movement. So I was expecting either a quick reaction from the imbalance, or if the trend changed, I expected a strong drop. However, later on, I realized that I made a quick emotional decision before actually seeing the price tap into imbalance. That really affected my decision making progress. So I was already in the trade, but honestly, I was not feeling confident at all because the price could have been easily dropped lower. I didn't want to risk anything unnecessary here, so I closed the trade around the break-even. Instead, I decided to watch the price action and see what would happen next. So rather than acting on your emotions, I decided to wait for the imbalance tap, the reaction, and maybe even the stock RSI signal to come together at the same time. That way, I would feel much more confident with the trade. So basically, my suggestion to you is this. If you are not sure about your open trades, just cut the trade. Take a break-even, a small loss, or a small win, it doesn't matter. Then wait for a better position based on your strategy. In this last trade example, I want to talk about how the price was crashing and there was a significant gigantic imbalance here. So in my mind, it is a very simple idea. Yes, the bears are taking control of the price here, at least in that moment. What I want to do was just short the price. But I wasn't sure if the price could pull back even deeper upside before it fell and crashed hard with the imbalance. So, when I'm not sure, it's best to wait for the stock RSI and combine it with your strategy for extra confirmation. So I wanted to wait for the price to cross over with the stock RSI before making any decision here. And the rest of the trade was just me waiting to see what would happen next in real time. Remember, imbalances are tricky things actually. Because sometimes the price pulls back deeper and deeper before it actually makes an action. And other times, price just crashes right after a very simple tap to imbalance without even pulling the imbalance at all. So this is why I like combining a few things together, like imbalances with order blocks, which I call dragon fruit, or imbalances with support and resistance flips. And if you use indicators like stock RSI crossover, maybe even EMA SMA crossovers, they can give you a little extra signals and confirmation for your entries. And please believe me when I say this, no one in the world actually knows the future in trading, because it is impossible to know exactly what will happen next in the market. All we are doing here is making a couple of educated guesses based on the historical data and based on what we see in real time with the price action.